When foreign investors establish a company in Vietnam, one of the most important operational decisions they make is selecting an accounting firm. But for many foreign entrepreneurs, startup founders, and SME investors, there is a difficult question at the beginning. How do we know which accounting firm is actually reliable? Because from the outside, many accounting providers appear similar. Most offer bookkeeping, tax filing, payroll support, and compliance services. But in practice, the quality difference between accounting firms in Vietnam can be enormous. And unfortunately, many foreign investors only discover those differences after compliance problems begin affecting the business. Many foreign-owned companies initially select accounting providers based mainly on low fees or convenience. At first, everything may appear functional. Reports are submitted, taxes are filed, operations continue normally. But over time, hidden weaknesses begin surfacing. Poor communication, incomplete documentation, weak audit preparation, incorrect tax treatment, or accounting structures that cannot withstand professional scrutiny. And because foreign investors often depend heavily on local service providers to understand Vietnam's compliance environment, these risks may remain invisible for years. This is why selecting the right accounting firm in Vietnam is not simply an administrative decision. It is a long-term risk management decision. At LTS Law, we regularly advise foreign investors who encounter operational difficulties caused by weak accounting support. In many situations, the underlying issue is not intentional misconduct. The real problem is that the accounting provider was never properly equipped to support foreign invested companies from the beginning. This is why LTS Law developed an internal process for screening accounting and audit partners before introducing them to foreign clients. Because foreign investors entering Vietnam need more than generic accounting services. They need partners capable of supporting long-term operational compliance in a practical and transparent way. One of the first factors LTS Law evaluates is whether the accounting firm has genuine experience supporting foreign invested companies in Vietnam. Many providers are familiar with small domestic businesses, but FDI companies operate differently. There may be foreign shareholders, cross-border transactions, intercompany arrangements, expat payroll, foreign contractor tax exposure, and English reporting requirements. Accounting providers without practical FDI experience may still complete basic filing work. But over time, hidden compliance risks can develop because the provider does not fully understand the operational realities foreign-owned businesses face. This is why FDI experience is one of the most important screening criteria. For foreign investors, communication clarity is critical. Because compliance risks cannot be managed properly if management does not fully understand what is happening inside the company. This is why LTS Law carefully evaluates whether accounting providers can communicate professionally in English, not only conversationally, but operationally. Can they explain compliance risks clearly? Can they communicate during audits or inspections? Can they provide understandable guidance regarding tax, payroll, and accounting obligations? Many foreign investors underestimate this issue until problems arise. But in Vietnam, communication failures often become compliance failures later. Another major factor LTS Law evaluates is transparency. Some accounting providers focus heavily on onboarding clients but become difficult to reach when compliance issues appear. Others avoid discussing risks honestly, or provide vague explanations instead of clear guidance. This creates serious operational exposure for foreign-owned companies. At LTS Law, we prioritize accounting partners who communicate proactively, respond clearly, and maintain transparency even when discussing uncomfortable compliance issues. Because in Vietnam, silence about compliance risks often becomes more dangerous than hearing difficult advice early. Many foreign investors entering Vietnam are not large multinational corporations. They are startup founders, entrepreneurs, or SME investors building businesses carefully and cost-consciously. This means accounting support must be commercially practical as well as technically competent. At LTS Law, we assess whether accounting providers can support smaller foreign-owned businesses with reasonable fee structures while still maintaining strong compliance standards. Because low-cost accounting without proper compliance discipline often becomes expensive later. and overly corporate structures may not fit the operational realities of growing SMEs. The right provider must balance professionalism with practicality. Technical skill alone is not enough. LTS law also evaluates the professionalism and ethical standards of accounting partners. Do they maintain proper documentation discipline? Do they explain risks honestly? Do they avoid overly aggressive compliance shortcuts? Do they support clients responsibly during audits or inspections? Foreign investors often underestimate how important ethics become in long-term compliance management. But in practice, accounting providers with weak professional standards frequently create hidden operational risks that only become visible later during regulatory review. For foreign-owned companies in Vietnam, compliance problems rarely appear immediately. Most risks accumulate gradually over time. Weak documentation, poor communication, incorrect accounting treatment, or inadequate audit preparation. And by the time these issues become visible, the company may already be facing tax exposure, audit pressure, banking complications, or operational disruption. This is why LTS law believes foreign investors should not evaluate accounting providers based only on pricing or marketing promises. The real question is whether the provider can support sustainable compliance as the business grows. Many foreign investors only realize the importance of accounting quality after operational problems begin affecting the business. But by then, correcting structural weaknesses often becomes stressful and expensive. At LTS Law, we help foreign investors reduce these risks by identifying accounting and audit partners that have been professionally assessed for FDI capability, English communication standards, responsiveness, transparency, ethical conduct, and practical understanding of foreign-owned business operations in Vietnam. If you are operating or planning to establish a foreign-invested company in Vietnam, and want guidance on selecting suitable accounting or audit partners, book a consultation with LTS Law. Because in Vietnam, choosing the right accounting firm is not only about compliance. It is about protecting the long-term stability of your business.